According to the latest Q3 earnings report from Berkshire Hathaway reported on November 2nd, Warren Buffett is selling the Berkshire Hathaway's largest holding, the Apple stock again. And this chart shows you the cash pile of the Berkshire Hathaway. It actually reached $325 billion. And in the beginning of 2024, that number was only $168 billion. So this is actually a 94% increase in its cash since the beginning of the year. So the cash pretty much doubled since the beginning of 2024. According to the report, there was a $34.6 billion worth of equity net sold in the Q3 or in the 3 months through September, and that's following the record net sold of $75.5 billion in Q2, which is the previous quarter. And in Q2, a bulk of the net sold came from the sale of half of its Apple stock from the last quarter, in the last quarter, okay? And the third quarter, which is the one which just got reported, was the 8th consecutive quarter in which Berkshire Hathaway has been a net seller of their equity stocks, okay? Because see, there has been 8 consecutive red bars on the chart. The 13F of the company is not filed yet. It usually gets filed about 2 weeks after the earnings report for this company. And in the earnings report, the company did provide a snapshot of its top holdings, revealing that as of September 30th, the Apple holding was only $69.9 billion, and it's down a quarter from the $84.2 billion in June 30th. And it's down 16.2% from March 31st of $135.4 billion, and it's down 70% from the December 31st. Down 70% from the $174.3 billion in December 2023. And this translates into just 300 million shares of Apple holdings as of September 30th. It's less than a third of what Berkshire owned at end of 2023, and 30% of Buffett's peak Apple holding happened in 2008. Okay, only 30% of that. So why did Warren Buffett sell the Apple stocks? In May, right after the Q1 earnings report, which is two reports ago, during the shareholders meeting, Buffett said Apple would likely remain Berkshire's top holding, indicating that tax issues has motivated the sale, and he said, I don't mind at all under current conditions building the cash position. Okay, but there has been a total sale of 70% of Apple stocks since the speech or since the annual shareholder meeting. So it's a very substantial sale of Apple, although Apple is still the largest holding of Berkshire Hathaway. Okay, because in this chart it shows you Apple over here, and it's ranked by the market value over here. And Apple is still number 1, and we have Amex number 2, Bank of America number 3. Okay, it's still the largest holding, but it's a huge, substantial amount of selling, 70% since the speech. So to me, I think building cash position is the major reason why Berkshire or why Warren Buffett decided to sell so much Apple stocks. But let's look at the cash ratio. So for Berkshire Hathaway, the current cash and cash equivalent, including short-term treasury bills, is at 53%, the green line. 53% as of the total portfolio. The equity securities, so the stocks, okay, are only at 45%, the blue line, the 45%, meaning that over half of Berkshire's portfolio is cash equivalent and short-term treasury bills. Okay, so why isn't Warren Buffett buying stocks? It seems like Berkshire has for years struggled to find ways to deploy cash due to lack of cheap opportunities. At the annual shareholder meeting in May, Buffett said he wasn't in a rush to spend unless we think we're doing something that has very little risks and can make us a lot of money. Okay, so pretty much saying he cannot find a good deal to buy, or he's saying the market, another way he's saying the market is too expensive to buy for him. Okay, so as a conclusion, Buffett's move indicated a cautious approach in the current market environment, while his positioning does look somewhat extreme, with over 50% of the portfolio, 50% of over 50% of portfolio being cash, 53% being exact. But nonetheless, I think Buffett's move can still be served as a valuable reference for the retail investors when the investor is considering the market conditions and is trying to form their own investment strategies. Thank you very much.